Hello and welcome to another update video about ADA. ADA since the last video has basically been trolling around a little bit. It's been sliding. We've got quite a strong sell-off candle here. I mean, this is the hourly chart, so it's not, it's not too meaningful. But the point is we're getting closer and closer to that wave X low here. And as soon as we break that, it would be a strong indication that we are actually heading down and that we are not going to see this ideal target range for wave Y. It would still though confirm the pattern in that we are just retracing here in a corrective wave to the upside. Sometimes you don't get into these ideal areas. The ideal retracement area is based on the calculation that wave W and wave Y have the same length. So it would be basically, if we take the Fibonacci extensions, this is just one way of calculating such a target. Here, and you would see they we've reached a 61.8% extension, but the 1-to-1 ratio would be sort of an ideal target. Okay, now we haven't we haven't reached that yet, or at least not yet. We can still get there, but the point here is as soon as we go below that wave X low at 36.6 cents, basically it indicates we're coming down. And if we then break below the 36.1 cent level, strongly indicates that that this is basically over and that we are going to go down. It would be best, and the clearest signal would be if we get a swift decline in 5 waves below the wave 5 here, or 5 of 1, and that we then come down in the 3rd wave here. And that would be quite a strong decline if this is the correct wave count. We can calculate the target again for the 3rd wave here as well, and it depends on how I see this, but in this wave count it would be taking the length of the wave 1, going all the way to the high of the wave 2, which would be the Y wave here. So it would be at the moment like that. It is basically a complete pattern. You can count it like that. And first target, very first target, would be the 1-to-1 ratio at 34.8 cents. But ideal target for that 3rd wave would be 33 cents. It would be quite a strong sell-off. But I also told you there is no guarantee that this is a 1-2 setup. It could very well be, and because ADA likes doing these things at the moment, it could very well just be an Elliott wave triangle, so that all of this is purely a triangle. And as long as we stay below 38.9 cents, this is an absolute valid view here, that this might extend out and we might get a larger triangle. So for example, a wave A, a wave B, we might now be putting in the wave C, maybe already complete, then a D down and then E up. So these are, and that's how I did calculate in the last video those 2 target levels. One of them was the 1-to-1 ratio for between waves W and Y, and the other one was here the ideal target for a wave C, which is the 61.8% extension of the wave A. And we're just waiting here for a clear signal at the moment that the market can give us. At the moment, what we're doing, we're retracing here, in my opinion, correctively. And again, as soon as we break one of these levels that I gave you, it should provide us with a clear answer to where we're moving. You can see if I just take the retracements here for the wave 2, we reached already the 50% Fib retracement. That could already be a signal that it's over this move. The wave 2 or a wave 2 in general doesn't need to retrace anymore. The point is only that the subwaves, waves W and Y, it would be ideal, or let's say the textbook targets would be a bit higher. But again, we reached the 50% Fib retracement for a wave 2. That's normally perfectly fine. And the pattern is full as well. We have 3 waves, so it could come down straight away. So just be ready, be awake here. But if this is a triangle, that could be quite a boring sideways range for quite a while. Okay, that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.